Hey, g'day, Rudy here. So the King. Always just going to start with a monthly chart on the King because this is a 5-year investment, which I think is matched nicely with, if you want to call them satellites, investments. So there's resources that MVR is very heavily weighted to iron ore. So it's good to add some other ETFs to it, and this uranium one is looking good. I'll just show you. So that's the weekly on the MVR. So this Uranium ETF, URNM, been banging on it for a while now. But if we, this is URNM over MVR. So URNM had the breakout, had the comeback, and had the test, and now is heading up. So if that was a share, you'd buy it. So for those who haven't seen URNM, it's basically got a big weighting. 18% to Cameco, 12%, 10%, 6, 5, and we'll go through them. So we've got, for some reason, so Deep Yellow, which is one of ours, is in there. So it's looking ready, set, go. So Cameco. So this is the king of uranium, the second largest producer, and they've got they merged with a mob called Westinghouse, who build the reactors. So this is the king of nuclear. And as a subscriber nicely told me, it's Cameco. Not Cameco. So get that important, alright, if you're telling anyone. Okay. Alright, so next on the list then is Kazatomprom. So these are the world largest producer of uranium. It's interesting, I heard they're going to have a drop in production, which adds fire to the uranium price, which I hadn't gone through. Naughty. So this is the spot price of uranium. So you can see it's had the breakout, come back, retest, and is now taking off. And the more I listen and read about it, there's tightness. There's a bunch of demand coming through the demand side with AI centers and utilities who are looking at where they want their uranium in 5 years' time. Because uranium is not like coal where you can just take it out of the ship and put it in the furnace. You've got to cook it for a couple of years before you can use it. And there's a bit of tightness coming in the market, and you can see that starting to come through on the spot price here. Anyway, so I think it's good. AI, it's data. We're going into this electric intensive world that we've been forced into. Electric cars, electric everything, electric AI, and nuclear is the most efficient, cleanest energy. Until then, I'll back my coal and gas. Okay, so the third company in the URNM ETF is this Sprott Physical. So Mr. Sprott's just got an ETF which holds uranium. The next biggest holding is this Energy Fuels. So they're basically the US's largest uranium producer. So that's about to take out highs. And then we've got Deep Yellow, which is an ASX listed company. So they're only developing. So I don't know how they got in there really. But anyway, they are. That's the thing with ETFs. You can't choose what's in them, but it's good that they're diversified. Because like Boss Energy investors know, you can get hurt. Okay. Now, if there is another ETF, Atom, which has Cameco, but it's got a bit of other companies that build reactors rather than producers. So this is New Scale. So they look like they've come back down to support. And Oklo. So Oklo looks like it's going to do a bit of consolidation. I still prefer URNM. This is URNN over Atom. So I reckon URNM is going to outperform Atom. Just my opinion. But my favourite one is a URNJ. Unfortunately, you can only get that in America. But it's got a whole bunch of our Aussie battlers in it. So it's worthwhile going through. So this is URNJ over URNM. So it's broken the declining wedge. So as bull markets go on, the smaller producers start outperforming the bigger ones, because the bigger ones can't supply the demand. So everyone starts looking around for like development. Geez, we need to start developing some of this stuff to supply the future. So in URNJ, well, there's 16%, 12, 11, 10, 8, 6. So we'll go through them. You can see Paladin's in there, and there's in Deep Yellow again. But Boss is in there, and there's a few others in there which we'll go through. So that looks fantastic. So Uranium Energy. So this is the biggest holding. So they're US-based uranium mining exploration, focused on. They got a special way of mining, getting the uranium out. Anyway, looks like they're doing a good job at it. Denison Mines. So they got the largest undeveloped uranium project in Canada. So what you find in this ETF is a lot of developers and junior miners, which Paladin is classed a junior miner in the or it's mid tier. Next Gen Energy. So they're a uranium exploration development company in Canada. So that looks ready to go. Okay, then you got our boy. Been banging on a few times. What's that? May. I know some people get that bored here, then they saw it come back down here, and well, that's life. Because you never know if it's going to come back. Sometimes this breaks out, consolidates here, then keeps going. Anyway, you can't say I haven't warned you. So that looks like it's ready to go. Okay, Mr. Boss, Mr. Shorts, Mr. Let's Kill the Shorts. So we've been looking at weekly, so daily. That's a lovely green candle. So they were always going to fix they had an issue with the how they mix it all up, basically. So they need to get the chemists in and sort it out. So it looks like something's happening there. So looks like Mr. Boss is back on track. Then also in this ETF there's a Bannerman. So they're going through a DFS, uranium play in Africa. Lotus. I've got a subscriber. He said he's been in and out of this thing. I reckon he's probably losing money. He doesn't want to look at it, he said. But basically, they're on track. Started commissioning the mill last month, and the President Malawi opened it on the 17th of August. So there's a whole spiel here that he gave me. Thank you. So if you know anything about any of these companies, send us the spiel. So, but anyway, they're looking good. So production to start by the end, so Q1 2026. So that's good. I reckon these development companies are going to do well, because the demand is coming down the pipeline from what I can read. Then this is another. I've never heard of some of these, including this one, Aura Energy, Africa Play. So it's on the ASX. Looking targeting production 2027. So all those are going to be looking nice. And that's the benefit of the ETF, is you just get all of these. These ones here they have like a 1% weighting, so they're not like if they're not going to swing it either way, but you add them all up, 10 of these 1%ers to 10%. Anyway, Elevate, that's another Australian one. They're trying to build some sort of demonstration plant in WA to see if they can take it over there to Africa. Peninsula, so it's a uranium producer over in America. Got whacked today. You probably can't see it, but down here, so it lost 50%. They did a capital raise at this level, which often happens with, which is strange because they're producing, but I think they're having ramp up issues. Like again, the benefit of the ETF, because if you'd backed all your money, because they had started producing, if you put all your money into this thinking they're producing, then bang. Berkeley Energy and Energia, so they're in pre-construction phase in Spain. They got permitting issues with trying to get the mine started. I think it's a pretty green place. Europe seems to be green. They seem to be worse than us. Good competition, I reckon. Both fucked. Excuse my language. Alligator Energy, it's another ASX one. I don't have a description. But anyway, that seems to be looking pretty exciting. Alright, so if you're looking for an alternative to add bolt-on to the King, something with a bit of growth in it, it's not going to be a huge dividend payer, then URNM looks like it's going to outperform it, so why not add a bit of it? Alright then, let us know your thoughts. See ya.